Hello and welcome in Stocks and Crypto Advisor channel. Here we are looking for interesting buy opportunities as stocks and crypto markets. So today we will talk about Johnson & Johnson company that was showing recently very nice upwards wave that started from the March and was ongoing all the way from the levels about 157 to almost 180 plus. So now, although we see some kind of signs of deceleration, main indicators of mid and let's say short term, like simple moving averages 20 and 50, the blue and red line correspondingly here are bending downwards. So what does it mean? It means that actually their second derivative, so deceleration parameter, is going down. It's negative now, meaning that we might turn from the upwards move to downwards. And in that sense, of course, the question is, if this is going to happen, what are we going to do? Where are we going to buy? First of all, few words of why we think that it's going to go down now. From technical point of view, we can clearly see several indicators for that. The small one, still not very clear. It's seemingly like behavior of RSI, seemingly trying to bend downwards. But of the strongest one here, you can see that moving averages, MACD histogram here, MACD itself, the two MACDs themselves are actually quite high and going to go down, but MACD histogram is actually piercing downwards after having a small false positive wave here. You see this kind of move, down, up, down. So this is usually a very strong indication, meaning that we are going to have quite a decent wave downwards, meaning the price should be dragged downwards as well. So from all of this, you can say, indeed, that's probably time for wave to go to its, let's say, logical continuation and then, let's say, have another onset. So most probably the, let's say, trading pattern we will have here is the move down till a correction level or recharge level. We will talk about the levels now. Then will be a small false rebounds, another go down, and then we will have the major rebound. So something like this should happen, though we can have a more saw-like moves here in between. We will talk about those. These will be mainly defined by the levels of support and resist. So now let's talk, once this starts, where we can buy and how we can sell. Of course, the first recharge might be happening here at this line, but we're not interested in that because we want to trade a little bit at the longer period. So for that, we need to see the levels where we can buy and sell. Of course, the most important one will be here. This is the line where we saw actually rebounds from the previous waves, and we saw continuation pattern confirmations here. So this would be that line, and the upper part of it will be here. So these are the levels between 166 and 169. I will not talk about cents here because otherwise, it's not really important. The volatility is still high and the price is still high in that sense. So we can just look at the dollar indications only. Later we will write down the numbers. So the next level where we can still continue going is actually here. It's also can be clearly seen. This is the rebounds levels, the major rebounds, although we still pierced those for the previous two waves. Here it was the resist line for the wave of November, and of course the lower part here would be here again. So this would be these rebounds levels, these areas, and the third line, it will be everything below 155 where we can buy. I'm not drawing further as a channel because as an area actually, because it's at least probable it will go there, and actually this will be immediate buy call if it hits 155.80, let's say 156. So now let's write down our call outs where we can actually buy those levels. So one would be 166, 168. Let's write it here. 166, 168. Let's make it a little bit bigger, so it will be easier to see for us. Yeah, something like this. So this would be the first call out. The second would be 150 and 162, let's say 61, something like this. Let's write it down here as well. So This would be then 159, 162. So this would be our second call-out channel where we can buy. And then the third one here, it will be anything below 156 actually. So let's write it down. Everything below 156 we are going to buy. And now the question is how to buy. How do we trade? At our channel we propose standard, classical, but quite safe, to our opinion, way of trading. It's a non-linear or pyramidal averaging down, meaning that you buy at the major levels with more and more money. This way, your moving average will be as close as possible to the next channel of defense. So with this sense, it means that if you want to trade here, as I said, the rebounds might take at any moment, at any line, but still can go lower, because what you need to understand about technical analysis is that it's all about, let's say, probability, and it's all about the levels and chances. Sorry, I think I was drawing a little bit on another side. Let's put this here. So it's all about levels and probability. So what we do, we try to take the maximum probability, so to mitigate all risks, but also might happen that the lowest probability will work out, and meaning this means that instead of rebounding from the current levels, we will go lower. That's why you need to think of further defense strategies. This way, the more defense probabilities you have, the overall chance of the winning is much higher. It's a standard, let's say, statistical theory, but also from the trading levels, we look at this. So it's a combination of trading levels analysis plus some statistical considerations. So with this being said, how we usually advise to trade? We advise to trade with the strategy of 5 in this case, meaning that the money you would like to trade here, you can split in 5 portions. Then you can buy with one portion at the first level. If the price declines to the second level, meaning that 159, 162, you can buy with another 2 portions. And then if the price goes even further and goes below 165, then you can buy there with another 2 portions. And then at any rebounds, once you have a profit, let's say up to, in this case, would be profit estimation would be between 7 to 10%. So you have 7 to 10% profit, then actually it is advised to buy and to sell and exit the current position. So this would be the most, let's say, let's put it like this. This would be the most safest way to trade here, and then just to seek for another opportunity, either in the same position, or ticker, or at another tickers. The market will be posting soon more and more. So we are coming back actually after some period of, let's say, technical reconsideration of the channel. So with this being said, that's all for Johnson & Johnson. Thank you for watching. Good luck with it, and see you at another episodes at Stocks Advisor channel.